If you are still placing trades every day and you think more trades means more profits, then this may be exactly why you are still not making money in Forex. And the worst part is, you probably think you are doing the right thing. In this video, I'm going to be showing you what most traders are doing wrong and the simple shifts that can completely change your results. But first, let's understand why most traders never make money in the first place. So if you have been trading for months or maybe even years and your account still looks the same, this is definitely the reason why. It's not because you are not smart, and it's not even because your trading strategy doesn't work. It's because of these hidden trading habits. The first one is overtrading, followed by emotional entries. Then we have lack of patience and discipline. And we have the fact that most traders also trade every setup that come their way. And finally, we have no clear trading strategy. Overtrading is a very big killer for traders. We have a trader that could believe he is a day trader and is entering maybe 3, 5, 10 trades in a single day, looking for every high or every low or every move just to catch every move and hoping that catching all those moves equates to being a good trader or maybe gives him more money at the end of the day. The emotional entry is another big killer in the sense that traders entering a trade without any clear defined rules, just based on their feeling or their gut of what to expect, probably thinking the market should buy, let me just buy, or probably thinking the market is already buying, let me also jump in on the buy. These are emotional entries and they kill your account gradually. Lack of patience and discipline is even a much bigger killer because patience is something that is non-negotiable in trading. I always follow this particular saying that market or the forex market is designed to take money from the impatient and give to the patient. So you need patience and discipline in this business. And the other one we have, which is trading every setup. Yes, all setups are more like outlook, more like forecast of what to expect, but they are not strategies and they are not predictable opportunities until you make it so. And if the fact that you have a setup now means you now just go ahead and start trading all your analysis, you will definitely keep on losing money. Finally, no clear trading strategy. This is still more like relating back to trading every setup, because if you don't have a clear defined strategy of how to execute or what to trade, every setup looks to you like a trade and you keep on jumping on every setup, and that's because you don't have a clear defined trading strategy. You see, all of these things I mentioned individually, they might look very harmless, but when combined, they destroy trading accounts. And here's even the dangerous part. Some traders believe that the more trades they take equates to the more profits they get to make. And this is the biggest lie retail traders have ever believed. They believe more screen time, more setup, more entries is equal to more profits. And this is totally false. In reality, the more you trade without a process, the faster you even get to lose. So why you traders keep doing it? Let's talk about the bad habits. Because a trader thinks every setup is an opportunity. And in reality, not every setup is a high probability setup, which means not all setups you come across are tradable opportunities. Now, this is one of the mistakes, or should I say, these are still the mistakes that traders make. No filtering of trades or setup, no confirmation condition, and also filled with impulsive entries. More like traders are reactive. You just see a trade hitting a POI and the market has not even closed though. You're already jumping in on the trade because you have that belief that market should buy from this other block because it has all the conditions that you think should support it. Whereas you are not getting a confirmation that particular other block is not even following what your trading strategy looks like. And those are what we call the impulsive entries. Another thing to note is this: you are not just trading the market, you are trading your emotions. We have the fear of missing out, we have revenge trading, and we also have what we call boredom trading, which is trading just to feel productive. Revenge trading is even one of the big killer as well, because when you take a loss, if you are unable to take or understand and accept the risk you have taken in the first place, there's a high tendency you keep on jumping into the market in trying to make back what you have just lost. At the end of the day, you keep on losing money. Personally, for me, in my community, I don't support revenge trading, and we don't even support the idea of what we call recovery trade. And let's go back to the FOMO, which is the fear of missing out. This is so bad and very rampant in our trading business, because a lot of traders have little patience in waiting for a setup, and also you could even have all the patience in waiting, and market gets there and is already leaving you, is already going your way, but you do not jump in at the right time. There's no how you will not FOMO. But just remember that the market likes to punish emotional traders. So now let's talk about the real shifts. You see, the market doesn't reward activity. It actually rewards your precision. So it's not a function of how well you stay in the market. It's not a function of how hardworking you are. The forex market is even a kind of market that you don't even need to think you are very hardworking, then that will give you more results. I always tell people that if it was about hard work, then the professors we have in schools, they should be the ones celebrated as the most profitable traders. It's not a function of intellect, or maybe you are very brilliant, or you are a bookworm, or maybe that's why you can make money in forex. It's never any of those factors. The market does not care about how many trades you take. The market actually rewards your precision in the game. And just so you know, that professional traders are not always that active. They are very selective, because smart traders approach the market completely different, and this is where everything changes. So now that you understand the problem, so let me show you the solution. Because smart traders don't even trade more, they actually trade smarter. And this time around, I want you to open your mind for the next part, because this is where most traders finally get it. So let's talk about what smart traders do instead. The first one is they plan their trade and trade the plan. This statement might look very general in the sense that a lot of traders keep on repeating the same thing: plan your trades, trade the plan. But you must understand the meaning behind it, right? Trading your plan or planning a trade. For example, this is what the meaning of planning is: higher low, higher low, higher high. You see, once the market starts making a pullback here, you at that point you start planning. For example, I have this now as a break of structure, right, which is clear. I can see that as a break of structure. I determine my fee, my premium and discount level, and after determining my premium and discount, I choose out my PDRA and I bring out my POI out of that. And at that point, I'm already doing what? I'm already planning my trade, because I already know that the market here has a previous mitigation, and that helps my BOS. Okay, part of the things I use as confirmation is I don't create any BOS or any impulse that does not have a base. That means it's not resting on a previous mitigation. So once I already have all these confluences and validation, I already know, okay, I'm planning that market is going to buy from here. However, one other thing you must do as a trader this time around is you must plan for different possibilities. You see, most traders, or as traders rather, we always plan for only one outcome, and the outcome one would plan for here is I'm only planning for buying, and that is what most traders get frustrated over and over. At this point, you are only planning for buying because that's exactly what your setup or your system is looking like at that point. But as a smart guy, as a smart trader, you can start thinking in advance about your setup. Yes, I want to buy from here. Why am I even buying from here? Why am I even going to place a trade from here? It is the last demand in the range. So that means once that demand fails, and that is one of the smart way traders think. For example, look at this. I know that when price gets to this demand, we're going to have a continuation from that demand to the upside. Now, several things can happen around here. I can have price just from that point buying from here, right? That's a possible scenario, isn't it? Another scenario is price can break out, total breakout here, and that's a violation of my demand zone. So hence there's a violation of my demand zone, which is also a possibility. I know that, okay, once price breaks my demand, either I place a trade there and I lose. I already planned in advance. If price is breaking this level, I don't know, do I have any reasons for price reversing there? I'll go and find the reason to it. Like, is it priced right from a key level? Is it at the premium level or something? So I must confirm the reason for even that violation. That's another thing, because at that point, I'm deciding in advance if price visits demand, what am I doing next? I'm going to be looking for the next premium area to sell from, right? That's the next possible thing I'll be looking for. And not even just breaking out alone. I will also plan in advance that if price is breaking out of this level, for me to even take it as a break of structure, for me to even think that there will be a reversal here, price must break multiple lows. It's not just by breaking ordinary a single layer, I will say is a break of structure. Let price go ahead and break about 2 lows. That's double break of structure for me, right? Then I can confirm that yes, truly we're about to have a reversal or a total change in direction. That is what is a possibility I would have also planned in advance. Then thirdly, the third possibility here is I can also plan for a manipulation. Now, in my previous video I posted on YouTube here, I showed a strategy, which is the one strategy for life, whereby price can trade to your external range liquidity, in this case the old low here, and we are going to have a manipulation. So price here is doing a manipulation and returns back. So you can take an entry from the reclaimed block we have here, and your target is going to be the previous high. Okay, so in this kind of model, it's a very simple model that you can use in even getting directional bias according to the second thing you need as a smart trader. Okay, so this particular model here is based on, we have a range like this. When market comes back to the range low, we have a manipulation happening there. So once that manipulation returns back into the range, you can enter your trade from the reclaimed block we have here. And once price, you take that execution from the reclaimed block, your target is certain, and the target is the previous high, which is this point. So this is a model, it's a very clear defined trading setup, or a model that we can even call it strategy, because it tells you about direction and it also tells you about entry, right? It's not just by saying that price is going to buy here, it also states where you can enter, which is you buy from the reclaimed block to trade towards that direction. Now let's assume that this is my plan, or let's assume at the first instance price kept on approaching that point. If I had that plan in advance, when that thing happens, it will not be strange, because I already have everything planned and all, like I've think it through, and I already know what the market is possibly going to have up, it's possibly going to do around that area. So here, if we have that manipulation eventually happening, I'll just be trading it like easily. When others are still thinking that, okay, this is the demand has filled, they're already packing out of the market and thinking, okay, let me just move out, let me walk away. Me, I already think, because I've already planned it in advance, this will not come to me as a shock, because I would know the next thing to do, and the next thing to do, and the next thing to do. Now, and that's what we talk about also trading along with directional bias, not just random setup. Because imagine if there's no because like I said, this particular model here explains direction, right? And trading any kind of model without any sense of direction. Now you can get directional bias with using different methods. Okay, I'm going to be teaching so many methods in getting bias real soon. So one of the methods in getting bias, we are going to be talking about order flow. We're going to be talking about the CRT model, the popular CRT model. We're going to talk about PDA, that's the price delivery algorithm. Then we're going to talk about the MSNR, right? And we have several methods that we use in getting even direction. We're going to talk about retail concept as well. Let me just put retail concept, right, to get directional bias of the market. So order flow is where this guy here is even leaning on. That's a market structure, the advanced market structure. Okay, knowing that price has there's a violation of this low here. Is a rate actually, not a violation. Market is doing a manipulation below this daily range low, and price tends to target the opposing side of liquidity. You know, we say when price takes external, it targets the opposing external range liquidity, right? And that's what has happened here. So once you establish directional bias, you must also learn to wait for confirmation, right? Apart from the fact that, because normally I could assume that this thing that happened here is a manipulation, and it turns out not to be a manipulation, right? That maybe it's just a proper breakout that has happened there and market wants to change. So you must also learn to apply confirmation for your trades. Now look at this. Let me use USD as a case study. Now if you take a look at this setup, what do you see? A similar thing like what I have been explaining. Right? See the setup here. A previous high, a low, a higher high. Market made a pullback. So at the point market was making that pullback, that's why I said you think of the possible outcome that will happen. because right here, this is the last demand zone in this range. This is a low, this is the high, and that's the last demand zone. So at that last demand zone, that means there's a lot of decisions to be made at this point. First possibility is price can definitely buy from the demand and keep on buying. No, while we're good, price can do that. In fact, I can even take this particular liquidity, that what we call internal liquidity, as a confluence to expect that reversal. But the moment I'm already saying that liquidity that we call internal liquidity, price is not using it here, that would already be the first red flag that, okay, since price is not ready to use POI here. But at that point also, the possible scenario I still have in my mind is we are either having that buy happening now, we are going to be having a proper breakout. And when I'm even having that breakout, I told you, I'm looking at breaking multiple lows, like price breaking this demand and also violating this other low here to go lower. So once I have that, I will not know, okay, it has changed to bearish. Now I want to look for a sell maybe around the supply here to keep on going down, right? So that would be my plan in advance also. And the last one is the manipulation, which is I would also anticipate that what if a manipulation happens, which is a stop hunt at that point. So once I already anticipate for all of these things, when they eventually happen, I will know in advance. My brain will already be programmed to take the actions appropriate for everyone or every of my current state, right? Look at this one here. Look at this. There's a manipulation here, what we call a rate of a swing low, right? Or a daily range low. And according to what I explained in this model here, price to trade where is going to trade surely to the previous high. And you can see what USHF has done. You can see what the trade was taking from the reclaimed block, and this was the target. Now, this particular market did not just even give us the target alone. The market also gave us several opportunities for entry, because once you establish direction, like I'm a very big fan of getting directional bias right. Once your direction is certain, look at this. The moment I know that market is heading into this high with a clear certain rule, like with that confidence that, okay, surely price will get here. There are several methods or several opportunities that the market can present along the way. For example, when I have this kind of structure here, this is an inducement external structure. Once price still pulls back here, I will still buy from here, because at that point, since the market is trading to this high, I know that market will just keep on forming external bullish structures rather, right? Price will just keep on forming bullish structures until it arrives at my final target. And that's what happened with this USCHF, right? You see that once market knew that it was going to this high, it did not just even go there in a straight line. Market did not even just stay there in a single file. You see the market forming several structures, right? Higher high, higher low. All of these are external structures. All of so now they see the internal pullback back into the POI here, and the market still continue from there until it arrives at the main target. So when you have the direction figured out and confirmed, there are several ways you can play. You can even see we had a sell setup again from here to trade towards the internal POI here for buys, and that's because of the we are flexible about it that way, because the direction here has been set and is already already certain for us. Okay, so these are the things that what smart traders do that other traders do not do, right? And also confirmation is also a key element. Even at this point that price was going to buy from this last range, go and check it out. This POI here is the last one in the range, you can see. So when market started making a push above here, all of these are the things we call internal liquidity, right? So this last POI here is what I know price will later trade back to. And when price got there, the entry was not instant. It was still taking after seeing a displacement. See, so the entry was taken after seeing a displacement, and of course the target was set as well. So mostly you must always confirm your entry. It's not just by saying I know that price to buy and I'm just taking a buy from there. Confirm, let there be triggers, let there be signs before you now later follow the wonders that comes with it. So make sure you have all those things in your trading system, and trust me, you're going to see very good changes in your account balance for sure. And yes, smart traders also limit their trades. I mentioned that earlier. Your risk exposure must be less. Your reward should be the thing at the back of your mind. So it's not by saying you are trading 1:1, 1:2, or 1:3. Always think about the reward. Okay, keep your risk at the minimal point and make sure your reward does the stocking for you, right? And lastly, we have they know the type of market. So mostly this kind of strategies, or anywhere you want to use at all in getting your bias, in trading, whatever, you must know the kind of market condition they work in. So all those ones I mentioned here works best in a structure, like in a trending market, like a market that has a clear structure. Now, it is not all market that will be doing higher high and higher low. I'm sure you have figured that out in the market yourself. It's not all the time you see the market doing higher high and higher low for you to follow. So if your strategy is based on market structure, trust me, be sure to know when a structure is not present and you move on or use something else in trading at that point. It is not all the time that the market will surely give you setup based on that strategy. You must realize this and you must accept it. Okay, and one other, in fact, this is a major factor that you should also go and consider that brings about the solution to emotional entry, and that is the comparison between pending orders and instant market execution. And I will tell you one fact: instant market execution brings about a lot of emotional and impulse decisions, right? If you always have to enter your trade on the spot at the moment, in that, in that same moment, you are still deciding or whatever, there's a high tendency you feel like you might have too much confidence. The confidence or that confirmation at that point might be too much, and you be like, you sure me die. You enter it excessively, or you are even not waiting for the confirmation. You are entering based on impulse. So there are several mistakes that can happen, emotional mistakes that can happen when you are doing instant market execution. Now, pending order on the other side is a much better approach in controlling your emotions, because you already planned the trade in advance and you would have set that trade in advance. So that either you are there, you are not there, even your risk could have been predetermined in advance. So you're not going to have that issue of saying when market gets there at that moment, in the heat of that moment, you're not like, instead of me risking 1%, let me just go and risk 10%. It's sure for me. When you do pending order, it has been set in advance. Your 1% has been set. You just realize that you come back, market is already playing out, or it's already taking you out, and you are happy about that, because at that point you would have prevented a lot of emotional bad decisions. So this and many more is what smart traders do that separates them from other traders that are not making money in trading. So thank you guys for watching. I've been Poppy Joe FS, and I'll see you guys on the next one. Thank you.